Hey everyone, Colin here. We're running a short survey to get better information on who listens to the show, and we're giving away free block space gear if you fill it out. If you find value in our shows or listen consistently, you can do me a huge favor and fill out the form. It takes about 30 seconds and helps me and the block space team keep the show running. You can find a link to the survey in the show notes. Thanks. What's going on, y'all? Welcome back to the Mining Pod News Roundup edition for this week. We've got the usual cast of characters, yours truly, Colin Harper, and the Matt Kimmel. And we are also graced with the presence of Ethan Vera, COO of Luxor Technology. Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it.
I want to take a second and talk about Colorado Air Filter, a new sponsor for the Mining Pod and a major supplier of air filtration systems for Bitcoin mining sites. Colorado Air Filter is currently running a summer sale on their inventory, from Mervate pleats to HEPA filters, shipments to installations, containers to retrofitted buildings. Colorado Air Filter has it all. Here's what one recent major miner had to say about working with Colorado Air Filter. Working with Keith and Colorado Air Filter has been a seamless experience from day one. Their filter media consistently meets the demands of our Bitcoin mining facilities, ensuring reliable airflow and equipment protection. Keith is responsive, knowledgeable, and understands the unique operational pressures in our industry. We value both the quality of the product and the outstanding service they provide. Units are ready to sell. Contact sales at coloradoairfilter.com using code MININGPOD to claim 15% off today. Again, that's sales at coloradoairfilter.com with code MININGPOD.
For those of you listening on the 4th of July in the US, happy 4th. And for those Canadians listening, happy belated Canada Day. We do not want to forget about our friends across the border. But to kick it off, as usual, we will have the Matt Kimmel, difficulty weatherman, give us a quick update on what we're seeing in the mempool and Bitcoin network data. So Matt, take it away. This is data from Hashrate Index and our friends at Luxor.
Yeah, we had a heat wave hit the States strongly in Texas, which brought a cold streak to hash rate. We had just an incredible difficulty decrease within the last week. 7.48%. Our friends at Luxor have it right here. Mempool's as dry as can be, but I mean, hash price has absolutely ripped, right? With this difficulty decrease. And now we are really trending. I mean, we're within 2%, gents, of Bitcoin price all-time high right now. So things are looking great in the Bitcoin mining community. We are looking to reverse quite a bit of that difficulty decrease. I think we're about a third of the way through the adjustment period right now, and quite a bit of hash rate looks to be coming back online. Looks like 6 and 2/3%. So, we're going to give back a lot of that. But right now, for the moment, difficulty hasn't been this low since the beginning of April. So something that I think everyone's happy to see and trying to take advantage of.
Yeah, my understanding was last epoch started with one of the first 4 CP events. So quite a few miners curtailing due to economic reasons and other auxiliary services. So we have seen quite a bit of curtailment across most major power markets in the US. That's not over yet. I think we'll continue to see some of that happen in July and August. And so there's probably going to be some level of depressed hash rate growth throughout the rest of the summer here as those kind of economic events continue. At the same time, also, we're seeing a lot of miners struggle, right? When ambient air temperatures are 40 degrees Celsius, it's hard to run your machines at 100% uptime. There's times in the day in which you want to either downclock your machines or have it off. And so we expect there to be continued curtailment, really, and probably not too much hash rate growth over the next 2 months, even with kind of the new gen machines being deployed.
Yeah, so you're telling me it's not strikes on Iran's nuclear base in the mountains? That was last week's cry corner. Is there are people speculating on Twitter that that the Iranian regime were mining north of 50 exahashes in the mountains in Iran. It's always never a dull day, always a good day for a conspiracy. Ethan, I've fielded this to Nick last week, and I just want to get your opinion on it too. Do you think a Zeta hash is still in play for 2025?
Absolutely, yeah. I think once we emerge from the summer, and you see kind of aggressive announcements. I think Marathon maybe we'll talk about later with the 75 exahash announcement. there is significant hash rate growth planned across both pubcos and private companies. And I think we're going to be well on our way to zettahash by like late fall.
Yeah, that makes sense to me. I think that at least from where I'm standing, it seems like it's been a slower year for growth than I would imagine. And with the summer months upon us, like you said, Ethan, we will see much more dampened hash rate growth throughout the next few months, which for all the miners who are plugged in and who are not suffering operationally or has a curtail, it's a great, great place to be in. Well, let's move on to our first news story of the day. Maybe not long awaited, but for certain people, especially HUD 8 holders, a long awaited day. HUD 8 energizes their 205 megawatt Vega data center. So this was a data center that they announced last year. It is in Texas. And the notable thing about this is as they were announcing this data center, they also signed this really interesting host to own deal with Bitmain for 15 exahashes of and bear with me here, everyone, the U3 S21 EXPH, which was Bitmain's server rack direct to chip liquid cooled ASIC miner, which will soon be operated by American Bitcoin. We'll get into that in a second. Seems like they're going to exercise the option to purchase those. So huge boost to HUD 8's megawatts under management. And it's also coupled with another headline from HUD 8 this week, where HUD 8 locked in 310 megawatt capacity of deals, securing power in Canada. Of all places, the Canadian market is not dead. According to Blockspace Media here, we were reading straight from an article we published this week. HUD 8 has agreed to make 310 megawatts of its gas-fired generation ready for Ontario's grid under 5-year contracts with the province's grid operator, the Independent Electricity System Operator. The arrangement will guarantee steady payments back to the Ontario government to HUD 8. Kind of two different stories, and we'll kind of tackle them, I think, in tandem here. But the Vega one, kind of business as usual. It seems like to me they got that up pretty quickly. That's interesting in as much as you have the Bitmain hosting deal in there, and that gives American Bitcoin a lot of optionality to just get hash rate off online immediately. You know, they've got 10 exahashes from HUD 8. They will have the opportunity to purchase this, and I'm sure they will. But the Ontario one is super interesting. And I would be curious to hear either of y'all's thoughts on it as to what we see this as being the future of HUD 8. I mean, I don't know how long they've had those gas facilities. I'm trying to remember when those acquisitions took place. But this to me seems to be maybe not strange, but a notable departure just from, pure play mining, as we have American Bitcoin coming out of the woodwork with HUD 8. And now we have HUD 8 pivoting totally to infrastructure. So I'll kick it over to y'all for second takes on that.
You have the America Bitcoin arm, and now you have the Canada Bitcoin arm. Is that what we're doing here? Yeah, I mean, to me, there's I see them more as just kind of headlines for now, and I'm kind of a wait and see what happens here. I mean, what jumps off the page to me is we have one company, two headlines of 500 megawatts. Like, these are big boy numbers between these two stories. And so, yeah, I mean, I guess I'm interested to see, this is a lot of infrastructure coming online. Data centers are so hot. What does this do for, what do shareholders think of this? How are they going to monetize it long term? How's the plan going to unfold? But yeah, I mean, it's definitely something to follow it. Ethan, you have any unique, clever, interesting takes for us?
I'll try to. And in addition, I think American Bitcoin also announced a raise, right? So like three announcements back to back. They're definitely, their PR machine is spinning. They're getting a lot of media attention, which obviously as a public company you want. So I think the split off has been successful in that regard. Yeah, a few things I'm thinking of here. First, kind of backtracking to the Vega deal. I like these call options a lot because my understanding is, 3 tranches after energization that they can basically call on those machines to purchase. And my understanding is it's a call option. So they have the ability that if those machines, their market value is significantly above the strike price, they're probably going to execute that deal, assuming they have the financing for it. And so as an analyst or somebody covering the stock, you'd probably want to monitor that machine price heading into that option, like strike price and duration, right? So you can understand, okay, is this going to be a position that Hut 8 enters into in a very attractive, or American Bitcoin rather, into a very attractive way. So yeah, those call options are very interesting, and I think we'll see more of them. The manufacturers definitely at some points have a vast surplus of machines, and this is one of the avenues they have to sell machines in a slightly different way, but one in which has a lot of demand from the miners. So that's interesting. In terms of this power generation, I believe this was done under Jamie. So quite a long time ago, the bid with Macquarie for these power generation assets in Ontario. And kind of, highlights Hut 8's approach of, diversification across mining, power generation, and then obviously with the data center plays that they have both operational and planned. And to me, there's this kind of disconnect with the market where a lot of these public companies are not being necessarily valued on everything they're doing. A clear example is, say, Marathon, right, where they're being valued close to their net asset value of the Bitcoin on balance sheet, not being assigned a lot of value to their mining business. I think that sentiment is true across a lot of pubcos right now. Investors are looking at them solely on a singular basis, whether that's a treasury strategy or whether that's a mining strategy. And so there's this incentive to basically split up the operating units of the business. So that's probably the best way in this current market condition that you can get the most value for everything you're doing as a company, is to split them up. And so the Hut 8 American Bitcoin play is starting to make more sense now, because you're going to be getting assigned value on each piece of the business rather than necessarily an entire piece of the organization being ignored, which is happening at a lot of mining companies right now.
Why sell this power to Ontario and not just use it for something like Bitcoin mining or HPC? I know that's probably a difficult question to answer without knowing the ins and outs of everything Hut 8's doing, or looking at their book and seeing what's going on operationally. But I'm just curious as to why you would buy a power plant as a Bitcoin miner and now a kind of fledgling AI HPC company. I mean, they're not really leaning as hard as some of the other miners, but there are kind of, breadcrumb trails there. Why would you not just leverage that power asset for your operations?
I'm not integrally familiar with these power assets, and so I could definitely be missing something. I think my mental framework, from an economic standpoint, would be if you can sell power to the grid at a rate that's more attractive than what you could earn by hosting, say, a hyperscaler in AI or mining it yourself. Obviously, there's additional capex on both those. It's basically an economic model at that point, and the Ontario power markets are trading at a pretty high price these days, and so they might find that's the best path to economic outcome. There's probably also some regulatory layer that we're missing, right? Probably some deals with some of these power generation assets and the grid in Ontario in which they need to supply to the grid. So there could be a lot of things behind the scenes, but I'm not familiar with it.
Well, when I first saw the headline, I thought that it was indicating that Hut 8 was actually going to expand its mining capacity in Ontario. And then when I read further, I was like, this makes more sense, because Canada, as we've talked about this a lot, Ethan, has just not really been a favorable jurisdiction to miners recently.
Miners, are you ready to earn more with what you already have? That's what Fractal Bitcoin is for, scaling Bitcoin with Bitcoin using a fully compatible recursive design. In just 7 months, Fractal's hit 18 million users and nearly 2 billion transactions. Fractal's cadence mining reduces up to 50% of your pool fee. No new hardware, no extra energy, and it's easy. FB rewards go straight to your existing Bitcoin wallet address. Over 90% of Bitcoin's hash power is already merge mining Fractal. Get more from the same resources. Start on Fractal today.
Ethan, you mentioned the American Bitcoin raise. It's actually the next one up. Hut 8 really is getting a lot of airtime here. We're getting a three-fer here for Hut 8 and American Bitcoin. But American Bitcoin raised $220 million in a private placement. This is from our friend Wolfie Zhao at the Miner Mag. And just seems like a pretty standard fundraising piece. American Bitcoin, I'm reading from the piece right now, a proprietary mining subsidiary of Hut 8, backed by Donald Trump Jr. and Eric Trump. It's raised more than $220 million in a private equity placement. Now, I don't see anything in here about the, Wolfie does mention the Vega site, and the PR for this raise said American Bitcoin aims to scale to 25 exahashes of self-mining capacity. I mean, pretty elementary math there. They've already got 10 exahashes from Hut 8, and then the other 15 exahashes could come from these U3 S21s that are currently housed at the Vega facility. So yeah, to your point, Ethan, it seems like the dual corporate strategy is really panning out. I mean, when I was talking to Asher about this a few months ago, said like, what are the primary benefits of having two companies that one of which, American Bitcoin is in the process of going public through this merger with Griffin Digital. I said, what is the main benefit here? And then one of the things he said was fundraising. And if we can kind of divide our business segments, I can go to people who want Hut 8 to be an infrastructure company and say, we are doing infrastructure fully. And then I can go to people who want to say, we just want Bitcoin mining exposure. I say, that's what American Bitcoin's for. So at least right now, it seems to be that this strategy is panning out. And I had this up earlier, but Hut 8 stock price is up 18% over the last 5 days to about $22 USD.
Yeah, I mean the PR bandwagon is pretty hot for Hut 8. They partnered as well with Pomp, didn't they? So they have a CNBC angle too, of voice in the fold.
And I think the next angle to look at here is really how these companies deal with their treasury. So you have a few Bitcoin mining companies that have a very large treasury, Marathon, Hut 8, CleanSpark, and also some in like Hive. But really, like, is that being valued correctly in those organizations, and should they split that off? So I'm excited to see like how they handle that. You would think that
do you think that American Bitcoin might take a little sliver of Hut 8's Bitcoin for their treasury?
It seems like with the capital raise that American Bitcoin just did, like a portion of that might be held in BTC, but most of it's going into hash rate expansion. I'm not quite sure what that cross transactions will look like across the two, but I think as the market rewards like a premium on your net asset value, like your MNAV, and it's 3-4x, these companies aren't incentivized to hold as much Bitcoin as they can. But as that decreases to say 1x or potentially even lower in some cases, then you start to kind of stakeholders will question, hey, why are we holding so much treasury on balance sheet? Like we've invested in an operating company. They should be able to deploy capital and earn a greater return than just holding, capital on balance sheet. So I think basically these executives are going to be in some ways like forced to go where the market wants them to. They can try and kind of skate where the puck's going, but really they're more reactionary than proactive, I think.
Yeah, I think we've seen a lot of that. I mean, the Bitcoin treasury play has just become really the investment thesis du jour. The pivot du jour of these companies, especially some of these who don't really have much going on for them. That is something, though, that Eric Trump, when I interviewed him and Asher Ganut at Consensus 2025 in Toronto, he was very explicit that one of the things they want to do is to accrue a Bitcoin treasury to try to tap into some of that investor enthusiasm. I think we've kind of beat this horse a little bit. We'll put Hut 8 and American Bitcoin aside. Interesting stuff going on there. For now, though, let's hop into an ASIC price update, Ethan, from you. And I'm going to get the ASIC price index chart up here from Hash Rate Index. We'll just take a look at that really quickly. And then I want to get up this chart of ASIC correlations to hash price, which tells a really interesting story. And you said there are a few trends that we can divine from that. But just to kind of kick it off, what are y'all seeing currently in the ASIC market, especially now that we're like 3 months removed from Trump's original tariff schedule?
It's a very interesting time to catch up on this because there was a 90-day pause on tariffs. And so the last time we spoke, I think, was the day after the tariffs were announced. And so that was around like April 3rd. Shortly after heading into that 9th deadline, Trump put a 90-day pause on additional tariffs above the 10%. So up until now, there's been an additional 10% on Thailand, Indonesia, Malaysia machines coming into the US. That could increase to, I think it's 25 to 36% or roughly that across the three. A significant increase. So we think the market is somewhat pricing in increased tariffs. So you do see US machines trading at a slight premium, but not to the extent that they're fully priced in. So it's kind of like a spectrum, right? Not everyone expects those tariffs to come in at the stated levels. Some people are expecting another extension or potentially some of these countries negotiating a better deal and getting a lower rate or getting nixed altogether down to that 10%. So we do see a kind of a wide range of expectations across miners, and that's leading to a slight premium on US models, but not the premium you'd expect. Now, that deadline is coming up next week. So very soon, as of, I guess, your next weekly update, we'll have information on how that unfolds. Like we can all imagine, ASIC prices are determined by supply and demand, right? So how many sellers are there in the market? How many buyers? Now, that sometimes gets mislabeled and people assume that machine prices fully track mining economics, right? So Bitcoin price increases, network difficulty drops, for example, and people assume that has a direct impact on machine price, but really it's just one factor that goes into the supply and demand. And this chart here really highlights that. We've seen at times strong positive correlation with hash price, which you'd assume is the leading indicator for machine price, but at times very negative correlation as well. And so talking about specific models, what we saw with the S21 series and largely S21 Plus was Bitmain got very aggressive on manufacturing volume. So they produced a lot of machines, they planned for a lot of machines. And once they actually came to market, they saw kind of a weakening demand for machines, a lack of capital chasing ASICs, more capital chasing Bitcoin Treasury and HPC. And so what we saw was really a drop in correlation quite significantly, which you can see at the bottom of the graph there. There's an ample supply, not a lot of demand. Those machine prices basically fell down significantly. Whereas on the other side is the old generation, which we describe as the S19J Pro class, the M30 class, really kind of in that 30 joules per terahash range. And what we saw historically there was a higher correlation with hash price, because the purchasers of those old gen machines were very much so cash flow driven, looking at investment return. They weren't necessarily playing the capital markets game of hash rate acquisition at all costs. They were looking at this from more of a pragmatic cash on cash return basis. And so that's why there was kind of this high correlation with hash price for a long period of time. Now, as hash price fell, we saw kind of a huge drop in ASIC prices from that generation. S19J Pros very quickly went from around $10 a terahash down to at one point like $225, $250 a terahash, which in our view was kind of too much of an overcorrection. And we basically saw a large buy wall. So a lot of buyers out there in the tens of thousands for S19J Pro series in that kind of $250 to $3 terahash range. And so we've seen that price stabilize very much so over the past 3 months, where there's and still exists today massive buy walls of J Pros at $250 to $3. And so we don't expect any further drop of J Pros regardless of economics for the foreseeable future. Where we do think there's going to be weakening is kind of in that S19 XP class, which is trading around $6 to $7 a terahash now. And given the machine quality and just not a lot of people wanting to run it, we think that's going to drop significantly and start trading at only a slight premium to the J Pros. So yeah, a lot of interesting themes happening in the ASIC market. It's quite dynamic in nature, and I think some miners are looking at this, analyzing it very carefully and taking advantage of it. Others are just kind of pressing buy on the latest gen machines, regardless of what's going on in the market.
Yeah, I really like the granularity that you have here. You have the full life cycle of the machine. You have 1 year, 6 month, and 3 month. For those on audio, apologies, but you should go check this out on YouTube. This is a really interesting data set from the Luxor team. So we can see in the 1 year, some of those S19s, T21, some of those models before the next generation models like the S21, basically zero correlation to hash price. That's not surprising right after the halving. But over the last 3 months, almost every single one of them, except for the S21, dips down. And the only ones that are not negatively correlated, if I'm reading this properly, is the X21 XP and S19 Pro. Is that right?
Yeah.
The red and blue bands. But over the last 3 months, every single other model that y'all track here has been negatively correlated. How much of that is the tariff pressure, which you said is not really showing up in at least premiums for US-based machines currently? But how much of that is also as some of these larger players like Iron, Bitfarms, etc., Riot, basically saying they are pausing or scaling back their forward guidance for hash rate expansion, getting into AI and HPC. How much of it relates to those two trends?
I think a fair amount. I think those two trends are very impactful for machine prices, amongst other considerations as well. Like for a long time, we talked about this theme, and I think you've covered in a lot of reports too, where public miners are historically incentivized to buy new generation machines. Analysts want high efficiency, and they look at cost to mine Bitcoin and other metrics that tend to push publicly listed miners to buy the best generation machines. At the same time, high cost operators, which there's some overlap, but also some private companies that are high cost operators, they don't have the flexibility to buy old generation machines, and so they are forced to buy S21 series or the latest gen. And so really there's been a lot of opportunity because of the lack of demand in kind of the mid-generation or old generation machines for those operators that, one, don't have shareholder pressure, and then two, also have a low cost of power. They have a little bit more flexibility in the range of different models they can play in. And that's led to better investment opportunities. And so a lot of these kind of themes are playing into the different supply and demand at different points for all these models. And really kind of what we're seeing is the best operators are looking at different analysis like this, maybe not this in isolation, but among some other analysis to determine, okay, now is a good time to say enter the S19 Pro market, or now is a good time to start selling our M30S fleet based on these dynamics.
So last question for you, Ethan. What does all of this mean for the S23? We're expecting rollouts of that, I guess, shipments in Q1 and Q2 of next year. With your finger in the wind and what you know from Luxor's ASIC trading desk, as much as you can say, what kind of demand is out there for that model currently? And is Bitmain going to get the asking prices that they are currently listing them for?
Yeah. So I think what we've seen with the past few major releases is that a few companies will hop on it sometimes for the PR, sometimes because they have these hash rate commitments already, but most are hesitant. Not a lot of people want to take first risk on very long dated future contracts. One is the machine risk, right? So I'm not necessarily speaking about the S23 in specific, but there's been models in the past that people are not happy with, such as the 17 series, the XP series, the 19 XP series, and so on. So you don't necessarily want to be the miner that bets big on a specific model that ends up being maybe not the best machine quality. And so there's always some benefit to waiting till later until a model is a little bit de-risked. And so I think we'll continue to see across all manufacturers, including MicroBT, Canaan, Auradine, etc., just like not that much demand for models that are not tested yet. You really just don't want to take that risk. And then the second is really just like, where do the markets incentivize? The US public markets we know are incentivizing Bitcoin Treasury right now, and they're incentivizing HPC. And so despite a few miners consistently growing hash rate like Marathon and CleanSpark, we are seeing like the announcements from Iron and Bitfarms on slowing down hash rate acquisition. And so you could predict that there's going to be dampening of demand in North America. Where I think that potentially is being alleviated is demand in China. We think there's going to be huge domestic growth in China over the next 6 to 12 months in Xinjiang and other regions in China. We think a lot of hash rate is going to be coming online. And some of the other kind of regions that people talk about, Brazil, Ethiopia, potentially Russia as well, just to kind of augment a little bit. But my personal prediction is that the S23 will have less demand in the US, probably more demand in China.
Quick question before we move on. I know Colin wants to keep going. Are the days of a cyclical rapid spike in ASIC prices beyond us? Are we to a more sophisticated market, or do you think that could happen again?
So the market for most models is really liquid now, and there's a lot more pricing transparency than there once was. So I think like the dislocated pricing that we've seen in past cycles where one company is selling a machine for $120 a terahash, whereas the market's trading at 80, probably not going to happen at wide scale outside of, a few retail platforms. But I could foresee, machine prices having, pretty strong intraday movements, like what we saw with the tariffs and otherwise, a 10 to 15% change up or down in machine prices, I think is very feasible at this point still. And certainly it becomes more and more prevalent in models that just have lower liquidity. So if, for example, a certain machine type is very hot, let's say like the S21 Pro, and there's really only, say, 20,000 left of July contracts, that machine price can move very quickly. Versus something like an S19J Pro, in which there's hundreds of different sellers and buyers, and it's a much more dynamic and liquid market. That's going to have a much harder time moving to the same level as like a very tight supply.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Ethan, before we move on, what rumblings are you hearing about these Chinese provinces reversing their bans? I mean, what does that look like? Is that kind of just people with privileged access, people who are well connected? How does that work?
Yeah, so I don't have a good take on the government side, but we've heard from multiple sources and confirmed it that there are more and more megawatts being deployed in China. And so we're hearing it through private companies, and we're seeing it in ASIC flows, that there's an expansion of mining farms. So I'm not exactly sure what the relationship between those farms and the local or national government is. But we're hearing just a consistent amount of growth in terms of machine flow and megawatts online.
Just another thing to keep tabs on. Thanks for those insights, Ethan. Really appreciate it. We'll try to wrap up here pretty quickly. We're getting close to time, but we've got two more stories. One that came across the desk right as we were starting to record, and that is Tether taking a 71% stake in a company that I've never heard of. It's registered in Luxembourg, called, and apologies for butchering this, ADICO Agro, which is a renewable energy and agricultural company. But apparently Tether's bought out 71%, and they are going to start mining Bitcoin in Brazil. This is from the Bloomberg terminal, PR Newswire through the Bloomberg terminal. ADICO Agro, a leading sustainable production company in South America, and Tether Holdings, the largest company in the digital asset industry, today announced that they have signed a memorandum of understanding to explore strategic collaboration focused on Bitcoin mining. As the world moves towards cleaner, more efficient energy systems, Bitcoin mining is emerging as a powerful tool to monetize surplus energy, strengthen grid stability, support the growth of decentralized networks. This project will explore how renewable energy assets can be leveraged to support the digital economy, unlocking new efficiencies at the intersection of technology. Was not expecting this. Tether expands into Brazil for renewable energy mining. Gentlemen, any takes on this news item? There's not really much there, but what comes to mind?
Well, I remember Paolo, the CEO of Tether, saying at Bitcoin Vegas, it's kind of surprisingly that Tether could be the largest Bitcoin miner by the end of the year. So there's like a bit of foreshadowing there. And I think he also mentioned it, them kind of staying offshore and doing a bit of Latin America. I remember Brazil being something cited, I think Paraguay as well. What we know about Tether is they're not strapped for cash. If they want to be the largest miner by the end of the year, they can be the largest miner by the end of the year, right? Not just in dollars and treasuries, but they also have, I think, like 100,000 coins. Like Tether has been accumulating Bitcoin now for several years. And if there's any company in the world that has benefited from an elevated interest rate environment, it has been Tether, who, now the stable coins, I think they're at like 150 billion, them alone, not including Circle. And so they've just been raking in revenue from high interest rate treasuries. So I think this is something to monitor. We won't get as much public information on it, right? Because I think they're going to stay out of U.S. markets. But I think, Colin, you'll probably be all over the grumblings that kind of, go through the wire throughout the industry. So I think it will be an interesting story to watch.
Yeah, to add on there, I went to Brazil earlier this year and met with a few local miners. So we're definitely excited about the Brazil market. There's some existing companies like Minter that have been operating large-scale mining sites there for some time. The power asset opportunities are really interesting in Brazil across the whole country. In the north, you have large wind farms, solar farms. Down south, you have the Itapu Dam, which you talked a lot about on your podcast with other like hydroelectric sites. It's really a lot of power generation opportunities there, and a lot of capital too. A lot of family offices in Brazil and high net worth individuals that want access to interesting investment opportunities. The challenge right now with Brazil, in my eyes, is largely on the customs and tariff side. It can cost upwards of 20% to get machines into the country, and so you couple that with like a high shipping cost. It doesn't make the most economic sense versus some of the other jurisdictions out there. Now, there's certain exemptions. So there's like one strategy where you can import machines on a temporary basis, not pay any taxes, and then you have to export them within like a certain period after that. But that's obviously not, a nice play for a majority of miners. But there are a lot of companies, and I'm assuming Tether probably is one of them, that are coordinating directly with the government to try and negotiate this and get it to a more reasonable level. I think if they can get tariffs down to like an importation tariffs down to around 10%, I think Brazil becomes very interesting, and it's going to become quickly one of the top 10 biggest mining markets globally.
You heard it here first, folks. I love this idea of the revolving door of ASICs. You just throw in a year's new model, and then you export it afterwards, and then get in the next year's new model. Like you said, though, not really ideal.
It's the trick.
Anyway,
it can start in Brazil, truck over to Paraguay, truck down to Argentina, truck down to Chile for graveyard mining with solar at the end of the life.
Right. I mean, that is something interesting to think about with the Itaipu Dam. Just you have Paraguay and Brazil right there with it. Maybe some optionality. The Latin American market is the most fascinating one to me, in a lot of respects. Just with per what you said, Ethan, it seems like there's a lot of untapped potential down there. Tether certainly seems to think so. They're expanding their mining empire. As listeners of the Mining Pod will know, they've been gobbling up shares of companies like BitDeer, I believe also Northern Data. So you wonder if they've got their machines hosted at BitDeer facilities. And I heard at the Bitcoin conference from sources close to the matter, for what you were saying, Matt, that some think that they already are the largest miner in the world. So I don't know. I mean, Paolo's saying they will be. This guy was saying that they already are. I would probably trust Paolo on that one. I do think that it's important to remember, though, that, and this feeds well into our next story and our last one, there are all of these public miners beating their chest about having 50 exahashes online, but then there are some of these private miners who are quiet giants in the Bitcoin mining landscape. Also makes you realize how concentrated hash rate is, but we'll leave that for another podcast. And as you were saying, Matt, for grumblings on another day. But to close out, we'll be quick here. I got a few headlines for 50 exahash milestones. First comes from Kango. They closed their share settled deal to add 18 exahashes from Bitmain to their hash rate under management. They are now 50 exahashes hosted at Bitmain facilities. Interesting to see a Bitmain proxy scale so quickly. Kind of easy if you are partnering with the king. But they now officially have 50 exahashes online, and they join a league of 4, which includes, as of this week, Iron, and as of, I think, last week, CleanSpark. CleanSpark got 50 exahashes on June 24th, and Iron also this week achieved their 50 exahash target. And Mara also was the first, I believe, back in April to hit 50 exahashes. And as Ethan said earlier, they are gunning to get 75. So all that being said, the death of the Bitcoin mining industry perhaps widely overstated. Obviously, as we've talked about a lot on the show, a lot of miners pivoting to AI and HPC, but you still got some of these pure play miners, Iron being the exception here because they're pausing at 50. They're not going to go past that. You got CleanSpark and Mara, at least, that are all full steam ahead. just chugging along with that hash rate. So not really anything else to add to that. I just think it kind of hit me the other day. I was sitting there thinking, it was like, 4 companies operate 200 exahashes, which is more than a fifth of the Bitcoin network on a given day.
25%.
Yeah.
4 companies, 25%. And that's without those private giants, as you were speaking of before.
Yeah, I mean, if you factor them in, I don't know where GDA's hash rate is, and I don't know Genesis Digital Assets. I also don't know where Tether's is, but you have to imagine you're getting close to maybe 300 exahashes with those 6 companies. But that's kind of it. I don't want to there's no cry corner this week. Maybe the cry corner is that Bitcoin mining is highly centralized. Surprise. But I don't necessarily want to gripe over that because it's, we've known about that for a while.
And just on the centralization piece, I guess from like a governance standpoint, there's 4 CEOs in charge there with 4 board of directors. So that is kind of concentrated amongst a few individuals, but the economics are very distributed, right? Like tens of thousands of shareholders across those 4 names. So
right.
It depends how you're looking at decentralization, but yeah, from a governance standpoint, obviously it's a consideration. I don't think it's a risk to the Bitcoin network, but it's something interesting to look at.
All right, that will wrap it up for this week's roundup. Thank you all for tuning in. I hope all of our American listeners have a wonderful 4th of July and great 4th of July weekend, and we will see y'all next week. Hey everyone, Colin here. We're running a short survey to get better information on who listens to the show, and we're giving away free block space gear if you fill it out. If you find value in our shows or listen consistently, you can do me a huge favor and fill out the form. It takes about 30 seconds and helps me and the Blockspace team keep the show running. You can find a link to the survey in the show notes. Thanks.